Buckle up, everyone, because today's deep dive is taking us straight into the fast lane of the auto industry. Volkswagen, a name synonymous with cars, well, they've hit a bit of a speed bump lately. And we're not talking about some fender bender. No, this is more like driving straight into a ditch situation, at least if you look at their stock price.
It's a head scratcher for sure.
You guys sent in a ton of interesting stuff about this, especially that breakdown from Market Pulse Daily. Big picture, folks, is Volkswagen, this giant of an automaker, is it sputtering out, or is this a chance to buy low?
See, it's fascinating because, yeah, Volkswagen, we're not talking about some small startup here. They're pulling in, get this, over 320 billion euros in revenue just last year. That's more than some countries.
It's mind-blowing. And the people power behind that, we're talking almost 700,000 employees globally, like almost half of them are in Germany alone.
Right, so you've got this company that's practically woven into the fabric of Germany, the economy, the unions, you name it.
Super important context there, but let's be real. The elephant in the room is that stock price.
Yeah.
Down more than 40% in just 5 years. Ouch.
Yeah, not pretty.
But that Market Pulse Daily piece, they really did their homework. They found 4 big, I'm talking massive issues that are dragging Volkswagen down.
There's definitely some serious roadblocks there. And figuring out if they're like temporary detours or Volkswagen's on a road to nowhere, that's the million-dollar question.
Exactly. So let's break it down, starting with what else? Electric vehicles. They went all in on EVs, even built a whole factory in Germany for them.
And that factory, not exactly firing on all cylinders, so to speak.
Right. It was supposed to be pumping out, what, 360,000 electric cars a year?
Yeah, that was the goal, but they're barely hitting 220,000. I mean, that's a big miss. Makes you wonder, did they totally misread how much people actually want EVs right now? Or is there something else going on with their production that we're not seeing?
It's a good question. Because it's not like Volkswagen is alone in this, right? 2024, it hasn't been kind to EV sales across the board.
Nope, not at all.
Ford, GM, Volvo, they're all hitting the brakes on some of their electric plans. The demand just isn't there yet. But here's where Volkswagen really missed a turn. While everyone else was so focused on going fully electric, boom, the hybrid market takes off.
Totally. And Volkswagen. They missed that memo.
Missed it big time. Only like 3% of their sales in the first half of this year were plug-in hybrids. Talk about a strategic blunder.
Right, especially now when you got to be adaptable, you got to be ready to shift gears quickly, you know.
Exactly. Which, ironically, brings us to problem number 2, the politics of their production. It's like trying to do a 3-point turn in a tank.
Well, yeah.
Volkswagen, they've got their size, their history, that massive workforce we talked about, those powerful German unions. And don't forget, the German state itself is a major shareholder in Volkswagen.
Right, and that's huge. It creates this, I don't know, this web of relationships and interests that can make it really hard to make quick, decisive moves. Like, were they pressured into this whole EV thing before the market was really ready? Were there political factors at play that trumped, no pun intended, pure market analysis?
It's definitely something to think about. Okay, so we've got this possible overestimation of the EV market, plus this company structure that makes quick changes about as easy as, I don't know, teaching a goldfish to fetch. But here's where it gets really, really interesting and honestly a bit worrying for the old guard of automakers. China.
Oh, yeah.
We were just talking about how EV sales overall have been slow, but that's not the case everywhere. China is like the 800-pound panda in the room, right? Last year, they bought a whopping 60% of all the electric vehicles sold worldwide.
It's insane.
Yeah.
And it's not just the number of EVs they're buying, it's who they're buying them from. Volkswagen, they used to be a powerhouse in China, but they're losing ground fast.
Fast to who?
To local Chinese brands like BYD.
BYD?
Yeah, BYD. They actually outsold Tesla last year to become the world's biggest EV seller.
Whoa, 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 hold up a sec. That's a pretty big deal. It really shows you how much the global car market is changing, right?
Absolutely. And it gets even more intense. The Wall Street Journal, they had this report recently after Ford's CEO went to China. He called what's happening over there an existential risk to traditional car companies.
Existential risk, wow.
Yeah, these Chinese companies, they're using the latest tech. They've got government support, local supply chains, all that. They're putting out EVs with more bells and whistles, often at lower prices than what the Western companies can manage.
So it's like that whole thing with Japanese car makers shaking things up in the U.S. back in the day.
Right, except this time it's electric, it's digital, it's happening on a global scale.
Yeah.
And that brings us to what might be the biggest hurdle of all for Volkswagen software.
The software game, right. Because cars these days, they're practically computers on wheels. And Volkswagen software, well, It's not exactly known for its speed.
Let's just say they've got some catching up to do. They've poured billions, I mean billions, into their software subsidiary, Cariad. But when it comes to integrating that cutting-edge software into their cars, they're still lagging behind. And this isn't just about having a fancy touchscreen. This is about the whole vehicle defined by software thing.
Okay, break that down for me.
So basically, the future of driving, it all comes down to software. Advanced driver assistance systems, those over-the-air updates, features that make your car more intuitive, all that cool stuff. And this is where the real battle for the future of the car industry is being fought. And Volkswagen, well, their struggles in this area, they're no secret. They've even made some moves that seem kind of desperate.
Like that whole deal with Rivian.
Exactly. Yeah. $5 billion invested in Rivian.
Rivian, they make those electric trucks, right? Awesome vehicles, but their profits? Let's just say they're bleeding money. So why would Volkswagen, a company with its own issues, throw that kind of cash at a struggling startup?
Because despite all their financial problems, Rivian, they've got one thing going for them. Amazing software. It's a gamble, no doubt about it, but is it a desperate Hail Mary or a smart move to buy their way into the software game? Only time will tell.
Okay, so far, not exactly a smooth ride for Volkswagen, right? EV troubles, that whole company structure thing, and then there's China just dominating the electric car game. Makes you wonder if Volkswagen's about to stall out completely.
Right.
But then you see their stock price, and it's almost like everyone's already written them off, like they're a lost cause. So which is it? Is everyone overreacting, or are we looking at a classic case of too good to be true?
Well, this is where things get really, really interesting. That Baltia Global segment you sent, they had some wild insights.
Okay, hit me with it.
So remember how we talked about Volkswagen's massive revenue?
Yeah, billions and billions.
Exactly. But right now, their stock is trading at, get this, a 3x multiple.
A 3x multiple? In English, please.
It means basically investors are really, really not confident about Volkswagen's future. Their market value, it's only 3 times what they're expected to earn this year. That's incredibly low, especially for a company like Volkswagen with their history, their size.
So the market thinks they're about to fall off a cliff?
Pretty much.
Yeah.
But, and this is a big but, Baltia Global, they think Volkswagen has some seriously undervalued assets.
Like what?
Well, for starters, they own a bunch of luxury car brands.
True. They've got Lamborghini, Bentley, Bugatti.
Right. Lamborghini alone, some analysts think that brand could be worth almost half of Volkswagen's entire market value right now.
Whoa. So they could sell off just Lamborghini and pretty much wipe out their stock price problems.
Potentially. And that's not even counting their stakes in Porsche and Traton, the truck company. Those alone are worth more than Volkswagen's entire market cap at this point. They can slim down, become a totally different company, and still be sitting pretty.
Interesting. Okay, but what about their debt? They've got to be drowning in loans, right?
Well, they do have a lot of debt, but that's not unusual for car companies. And they're actually in decent shape financially. Interest rates are going down. They've got a big cost-cutting plan in action. It's not all bad news.
Okay, so maybe there's hope for them yet. But, pause. What about China? Even if they fix their money problems, even if they sell off some brands, can they really compete with the Chinese, who are already miles ahead in the EV game?
That, my friend, is the million-dollar question. It's kind of like what happened with Japanese car companies back in the day, The American companies, they didn't see it coming. They underestimated the Japanese, and it cost them big time.
And you think the same thing could happen to Volkswagen, maybe even to the whole Western car industry, with China calling the shots this time?
It's a real possibility.
Yeah.
So is Volkswagen a great buy right now, a hidden gem just waiting to be discovered? Or is it a trap, a falling knife that'll cut you if you try to catch it?
It's a tough one. What do you think? What stands out to you? Volkswagen, man, they really are at a crossroads, aren't they? I mean, we started this deep dive thinking about them as this giant, this unstoppable force in the auto world. And now, well, let's just say things are a little less certain.
A little less certain, yeah. But that's what makes this whole thing so fascinating, right?
Yeah.
The EV transition, those political tightropes they're walking, China just like owning the electric car game, and then you've got software totally changing what it even means to be a car these days. It's a lot.
It really is. But even with all that, they've still got those glimmers of hope, those things that make you think maybe they've got this.
Right. That crazy low stock price, that could be a huge opportunity for someone who's, not afraid to take a risk. Plus, they do have those valuable assets, that cost-cutting plan they're doing. And let's be real, Volkswagen's a powerful brand. They've got history on their side. Never underestimate that.
Totally. So it's like they messed up, yeah, but the game's not over yet. They could still pull this off.
Exactly. And I think that's what's so important to remember here. This isn't just about Volkswagen, is it? This whole thing, it's the entire car industry going through this massive, seismic shift. Like, we haven't seen anything like this in 100 years.
It's crazy.
The old playbook, it's out the window. The companies that figure out how to adapt, how to innovate, how to beat the competition in this new world, those are the ones that are going to win.
And that brings me to my final thought, the thing I keep coming back to after looking at all this Volkswagen stuff. We've talked a lot about the big guys, right? Volkswagen, Ford, those Chinese companies that are just like crushing it. But what about the little guys, the startups, the ones who are just laser focused on EVs, on doing things differently? Could they be the real winners here? The ones who come out of nowhere while the big guys are still trying to turn their ships around? It's something to think about, isn't it? And on that note, a huge thank you to all of you for sending us down this Volkswagen rabbit hole. It's been a wild ride. Until next time, keep your eyes on the road and your minds open.